Good morning, everybody. It's Wednesday, October 2nd, 5:26 a.m. Central Time. Grain markets higher across the board this morning. December corn futures up 4 3/4 at 433 3/4, highest trade since June. November soybeans up 5 3/4 at 1063. December Chicago wheat up 9 cents at 608. December Kansas City wheat up 10 1/4 at 608.5. December spring wheat up 6 3/4 at 641.5. Let's start with yesterday's rally in the corn market.
So corn futures posted fresh multi-month highs overnight. The December 24 contract peaked near 433 per bushel and has now rallied 48 cents from its August low. Large money managers have been aggressive buyers. Private groups estimate that the funds were net short just 50 to 60,000 contracts at yesterday's close, compared to the peak net short of 356,000 posted in July. Harvest in the U.S. is extremely active, given a mostly dry weather pattern, yet hedge pressure appears to be mostly absent for the time being. Traders may be eyeing a tighter new crop U.S. balance sheet amid a lighter than expected old crop carryout estimate from USDA earlier this week.
Sharp rally in the corn market, smack dab in the middle of an ongoing U.S. harvest campaign. The weather forecast is wide open. There's no rain in the forecast. It's going to continue. So hedge pressure has been very much kind of absent here for the time being. And maybe that's because farmers are just so busy. You look at the fund position, and it's extremely interesting. So the private groups would indicate that the funds have covered in net 300,000 contracts worth of net shorts since late August. That's 1.5 billion bushels. So for the moment, it looks like the fund buying is more than offsetting whatever sort of hedge pressure we're seeing, which is interesting. USDA says the U.S. corn crop is going to be 15 billion bushels and change. So that 1.5 billion that the funds have covered in net is only like 10% of this year's crop. And that's not to take into account the old crop bushels that were priced during August. So I think the hedge pressure has been, I'm sure there's some farmers selling into this thing, but it's not been what I thought it would be. You know, you think about the storage situation on the farm. Interest rates are high. Storage is very expensive. Commercial storage is very expensive. There's a lot of obstacles to storage. So are farmers going to sit on their hands like they did last year and go into this thing again undersold, or will they come in and sell this rally? I don't really know. In terms of fundamental drivers, what fundamentals are leading the funds to cover shorts here? I suppose the report earlier this week was kind of friendly. Maybe it bodes well for demand in the future. We've got the river that's opened up a little bit, but at the same time, we've got this dock worker strike. So you could go either way on the logistics situation. I don't think the U.S. crop is the issue. We're going to talk about the new StoneX numbers. They raised their production estimates. I suppose you could point to Brazil, but they've got some rain coming. There's not one great reason why we've rallied 50 cents from the low. Maybe the market was just way out of balance. Maybe that we had a record fund short. Maybe we need to be back kind of in balance, and maybe we're approaching that sort of situation. No complaints from me, though.
U.S. farmer sentiment has fallen to its lowest level in more than 8 years. Purdue University's CME Group Ag Economy Barometer Index dipped to 88 in September, a 12-point decline from the previous month. The last time the barometer fell to this level was back in March of 2016, when the ag economy was in the midst of an economic slump. Farmers' primary concerns are low commodity prices and high input costs. They are also worried about the future of agricultural trade, elevated interest rates, and how post-election policies might impact their farms. Compared to their outlook last year at this time, farmers expect much lower profitability during the upcoming year.
Interestingly enough, I used to do a bunch of video work for CME Group, and every month they would have me do an analysis of the ag barometer. I don't know that we've ever talked about it on the podcast, but we're talking about it today because it's at multi-year lows. We're at 8-year lows. This is an index that's based on a survey of 400. It's just 400 agricultural producers on economic sentiment each month. So they put one out each month. The list of concerns is the interesting part for me. So the two big concerns among farmers surveyed are low crop and or livestock prices and high input costs. So it almost all ties back to budgeting and marketing. You don't see the ability to raise a crop on this list. Growing the crop is the easy part for most of you guys. This is the hard part, the financial side, the marketing, the budgeting, the input costs, the financial side is the hard part and the concerning part right now. So this is not surprising. And if you were to do this poll again and have it in real time today, it would look better because the markets have rallied, and that's such a big input here. But things didn't look so hot when this survey was taken during September.
So if you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Lots of what I call hardcore grain marketing information the last couple of days. Soybean HTAs and capture and carry. Should you be rolling your November soybean HTAs forward? And if so, why? On Monday, I did a cash grain marketing review, 2024 corn and soybeans. Ran through everything I've advised, everything that I'm thinking about, my good things I've done, bad things I've done. This is a super simple way to track what I'm doing, at least, and you can follow along if you want with regard to cash grain marketing. I break down everything by crop year, and percentage. There were no option trades at all advised for this crop, so it's all just straight cash sales, and it's super, super transparent. So if you guys are looking for a simpler approach, if you think maybe grain marketing's become a little bit too complicated, this would be something you should absolutely check out. Go to standardgrain.com. You can sign up this morning. I know you guys are busy. I know you're in the combine or you're in the truck. You can sign up on your phone. It'll take you like 30 seconds. We do Google Pay and Apple Pay and credit card. It's an absolute piece of cake. Sign up this morning. I will forward you a copy of this morning's email.
Iran launched its largest ever direct attack on Israel yesterday. Iran fired hundreds of ballistic missiles into Israel late on Tuesday. Israel's Iron Dome intercepted the majority of those missiles. U.S. Navy destroyers also assisted Israel with the attack, firing about a dozen interceptors. Israel has announced that there will be massive retaliation for the attack. Oil prices jumped more than 5% on Tuesday due to concerns of potential supply disruptions in the Middle East. The U.S. has increased its military presence in the region and plans to send several thousand more troops along with additional fighter plane squadrons in the coming days.
You had a couple implications here, a lot of movement in a lot of markets yesterday. We have a lot of wheat producers in the Middle East. They're all smaller wheat producers, but there's a whole bunch of them that add up. You've got Pakistan, Turkey, Iran, Iraq, Uzbekistan are all wheat producers. If you wanted to throw India in there, they're probably too far away to really matter, but it does matter when you add them all up, I guess. And I think that's part of the reason that wheat rallied yesterday and into this morning. We're right up against some big resistance in this Kansas City wheat contract this morning. If we can break this December contract up above 604, I think that would look good. Crude oil is toward the upper and extreme upper end of what's been a multi-month trend channel. And maybe this is enough for it to break out. I don't know. The stock market sold off yesterday. There was a lot of activity in a lot of markets on these tensions yesterday.
StoneX has raised its estimate for this season's corn and soybean crops. The commodity brokerage firm is projecting the U.S. corn yield to reach 184 bushels per acre, up from its previous estimate of 182.9 bushels per acre. Corn production is forecast at 15.2 billion bushels, up from 15.1 billion bushels. StoneX raised its estimate for the season's soybean yield to 53.5 bushels per acre, up from 53 bushels per acre. Soybean production is slated to reach 4.61 billion bushels, up slightly from 4.58 billion bushels.
This is a customer survey, I believe, that Stone does, and they are now above USDA with their yield estimates. They're at 184 for corn. USDA is at 183.6. They're at 53.5 for soybeans. USDA is at 53.2. So, as I mentioned earlier, the rally, whatever the reason is, I don't know that it's related to U.S. crop prospects. Not to say that Stone is gospel by any means, but you're going to see more private estimates out ahead of next Friday, I believe is the report, and from USDA. And they're probably going to look similar to this. I don't know that you're going to see anybody looking for drastically lower yield numbers from USDA month over month. So I think the crops, and this is what I've been told too, the crops are in pretty good shape. And a lot of this is anecdotal. I know yield reports, it's tough to sift through them and figure out what's real and what's not. But I don't think we have a major problem.
U.S. renewable diesel production experienced its largest monthly decline on record in July. From June till July, production dropped to roughly 4.6 billion gallons per year, a decline of about 6%. Renewable diesel production has risen significantly in recent years as a result of government-mandated consumption targets. Additionally, government subsidies have reduced production costs and stimulated investment. With that being said, output has surpassed demand, and we now have a market surplus. Also, from June to July, the demand for vegetable oils as a feedstock for the production of renewable diesel decreased by more than 5.6% to 1.2 billion pounds.
I emailed our resident biofuel expert, Pete Meyer, about this, and this is what he sent me. He said capacity is still higher than May, albeit by less than 25 million gallons per year. Much like grains and oilseeds, Fuel is in a low price environment, so we're seeing some of the marginal players go offline. This really shouldn't be a surprise. So nothing shocking. We hope the policy moves forward, and we've still got a lot of holdups within the government, which is kind of at a standstill right now.
USDA reported multiple flash sales on Tuesday. U.S. exporters sold 8 million bushels of corn to unknown destinations for delivery during the current marketing year, and exporters also sold 4 million bushels of beans to unknown destinations for delivery during the current marketing year.
195,000 of corn to unknown destinations. Somebody out there thinks that it's China, and I don't know if that's true or not. But if China has the ability to be the needle mover when it comes to exports and therefore balance sheets. I couldn't give you a reason why China would start a big import campaign, especially from the United States in this environment, given what we know about the Chinese economy, given what we know about Chinese stocks. They are doing a bunch of stimulus. I don't know. Maybe crazier things have happened. I don't see it. I hope I'm wrong. I hope it is China, and I hope it rallies the corn market $1 like it did back in 2020. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were up 10 cents to 70 cents higher. Feeders range from 95 cents lower to 5 cents lower. Box beef was higher again yesterday. Choice ended the day at $300.17. That was up 209. Select ended the day at $285.30. That was up 77 cents.
U.S. dollar's about flat this morning. Stocks are off again. The S&P's down 9. The Dow's down 120, but a little quieter this morning. Bonds off a little bit. Gold's down $17 after a big rally yesterday. Crude oil still higher, up 228 in the November WTI at 72.11. Have a great day, guys. We'll talk to you Thursday.